Basic income tax computation. Principles of income. Basis of assessment. Individuals are assessed to income tax on their income arising in a tax year. A tax year is the year ended on 5th April and is labeled by the calendar years it straddles. The year from 6th April 2021 to 5th April 2022 is referred to as the tax year 2021 to 2022. Personal allowance. Every taxpayer is entitled to a personal allowance, PA. The PA is an amount of tax-free income that every taxpayer is entitled to each tax year. The amount is reduced potentially to nil for high-income individuals. Assessable persons. All individuals, including children, are chargeable to income tax. Both spouses within a married couple are treated as separate individuals for the purposes of income tax. The tax residency status of an individual determines how much income is assessed to UK tax. All persons resident for tax purposes in the UK are assessed to UK tax on their worldwide income. Married couples. There are special rules governing the allocation of income between spouses where assets are jointly owned. Generally, income generated from assets jointly owned is split 50-50 between spouses regardless of the actual percentage ownership. Election available. Where jointly owned assets are held other than in a 50-50 ratio, an election can be made to HM Revenue and Customs, HMRC, for the income to be taxed on the individual spouses. According to their actual percentage ownership, civil partners are treated in the same way as married couples. Children. Children under the age of 18 are taxable persons. However, their income typically falls short of their personal allowance in any tax year, and therefore no tax liability actually arises on their income. Taxable income. The first stage of the income tax computation is to prepare a short statement summarizing all taxable income. Any exempt income is excluded but should be noted as exempt. Format of income tax computation 2021 to 2022. Particulars. Trading income. Employment income. Property income. Pension income. Non-savings income. Savings income. Building society interest. Bank interest. Dividends. Total income. Less reliefs. Net income. Less personal allowance, PA. Taxable income. Classification of income. There are a number of different sources of income. For example, income earned from employment and self-employment. Income arising from the ownership of property. Investment income. For example, savings income and dividends. Income from pensions. Income exempt from income tax. Non-savings income. Non-savings income comprises earned income and property income. Earned income comprises trading income, the profit of a trade, profession or vocation of a self-employed individual. Employment income. Earnings including salaries, bonuses, and other benefits from an office or employment are assessed as employment income. Pension income. Income from an occupational or personal pension fund. Property income. It is typically rental income, but also includes other items such as the income element of a premium or granting a short lease. Investment income. Sources of investment income include savings income, usually bank and building society interest. Dividend income. Exempt income. The types of exempt income are interest from National Savings and Investments (NS&I) certificates, betting, lottery, and premium bonds winnings, income received from an individual savings account (ISA). Reliefs. Reliefs are deducted from an individual's total income. They include certain payments that an individual makes and certain losses that may be incurred by an individual. Personal allowance. Every taxpayer, including children, is entitled to a personal allowance, PA. The PA for the tax year 2021 to 2022 is £12,570. PA should always be deducted from the taxpayer's net income from the different sources of income in the following order. Number 1. Non-savings income. Number 2. Savings income. Number 3. Dividend income. Surplus PA is lost. The PA cannot be set against capital gains. In certain circumstances, part of the PA can be transferred to a spouse or civil partner. Reduction of personal allowance, high-income individuals. The PA is gradually reduced for individuals with income in excess of £100,000. The reduction of the PA is based on the taxpayer's adjusted net income, ANI, which is calculated as follows. Net income less gross gift aid donations, see note, less gross personal pension contributions, see note. Adjusted net income, ANI. Where the taxpayer's ANI exceeds £100,000, the PA is reduced by 50% multiplied by ANI minus £100,000. If necessary, the reduced PA is rounded up to the nearest pound. A taxpayer with ANI in excess of £125,140 will therefore be entitled to no PA at all, as the excess above £100,000 is twice the PA. Income tax liability. The second stage of the income tax computation is to compute the income tax liability on the taxable income. Different rates of tax apply dependent upon the type of income. Non-savings income at the rate 20 or 40 or 45%. Savings income at the rate 0 or 20 or 40 or 45%. Dividend income at the rate 0 or 7.5 or 32.5 or 38.1%. Income tax liability. Rates of income tax. Non-savings income. This chapter deals with the rates of income tax payable on non-savings income. That is, trading income, employment income, pension income, and property income. The rates of income tax for the tax year 2021 to 2022 for non-savings income are as follows. A basic rate of 20% applies to the first £37,700 of taxable income. A higher rate of 40% applies where taxable income falls in the range £37,701 to £150,000. An additional rate of 45% applies to taxable income in excess of £150,000. In summary, the income tax rates for all sources of non-savings income for the tax year 2021 to 2022 are: for level of income, basic rate band, first £37,700, non-savings income 20%. For level of income, higher rate from £37,701 to £150,000. Non-savings income 40%. For level of income, additional rate excess over £150,000. Non-savings income 45%. The income tax liability is calculated on income in a strict order as follows. Number 1. Non-savings income. Number 2. Savings income. Number 3. Dividend income. Approach to the income tax computation. Number 1. Calculate the individual's net income, which may be the same as total income. Number 2. Consider the reduction of the PA if A&I exceeds £100,000. Number 3. Deduct the appropriate amount of PA to calculate the taxable income. Number 4. Calculate the income tax liability bearing in mind the higher rate threshold of £37,700 and the additional rate threshold of £150,000. Illustration 1. Thomas has taxable trading income of £135,000 and employment income of £33,680 for the tax year 2021 to 2022. He does not have any savings income or dividend income. Calculate Thomas's income tax liability for the tax year 2021 to 2022. Solution. Trading income £135,000. Employment income £33,680. Total income £168,680. Less adjusted PA, note 0. Taxable income £168,680. Income tax. Basic rate £37,700 multiplied by 20%, £7,540. £112,300 multiplied by 40%, £44,920. £18,680 multiplied by 45%, £8,406. Total £168,680. Income tax liability £60,866. Note: in this example, as total income is equal to net income is equal to ANI, and this exceeds £125,140, that is, exceeds £100,000 plus double the PA is reduced to £0. If it is clear that total income equals net income because there are no reliefs, it is not necessary to use both labels. The effective rate of tax on income between £100,000 and £125,140 is 60%. This is made up of higher rate income tax is equal to 40%. Last PA, 1 divided by 2 multiplied by 40% is equal to 20%. Taxpayers at or near this margin may therefore wish to consider making additional gift aid or personal pension contributions in order to reduce their ANI below £100,000.